Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at oil, specifically US oil, WTI, and trying to make sense of the current price action. So we've had two counts on oil for the last couple of weeks, both are still valid, and we keep getting thrown back and forth through all this choppy sideways price action that we've been in. Going back to 8th of March onwards. We're on the daily time frame in our arithmetic scale, by the way, at the moment. So just some sideways chop, trying to get some kind of resolution down or up. So we really are not going to spend much time on this one, guys. Sorry, I didn't mean to move that. Let's just lock that in place. So the bearish count was a W, X, Y, 3-wave move here, X, 3-wave move here, Y, and now looking for a 1, 2, 3, 4, 5 down to complete a larger A, B, C correction into a 2. Well, this is looking less and less like that the more time I spend looking at it, and we haven't invalidated the count yet, as we need to move above this level here. It's 67.912. This would be our bearish invalidation, and what looked like an acceleration and a break of the channel a few, last week and the week before, we saw this move down, breaking the channel. This looked like the 1, and then we were expecting a 2 to come in, but we've just continued higher and higher and higher, and we're now very close to invalidating this short-term count here. So what we're going to do is we're going to come into the hour time frame here, and we're dealing with something that looks impulsive, I think, now, to be honest. This move here, this could even be a 1, 2, 3, 4, 5, 1, 2, 1, 2. Now we're going to go much higher. So we're very, very, very close to taking out the start of this proposed wave 1. That's 66.997. Excuse me. Let me just pop another price label up here for the moment. Yeah, so I'm just losing faith in this bearish count, really. I mean, we came down in what looked like 5 waves, that should be a minute time frame. Let me just correct that. We came down in what looked like 5 waves, 1, 2, 3, 4, 5, and started coming back up in what looked like 3, A, B, C. Then we came down, then we extended again, then we came down, then we moved up and made another high, then we came down through the channel. Now we're coming back up. So I'm very close to. I've already quit on this. I think this, to be absolutely honest, I'm not really convinced of this at all anymore. I'm just waiting for it to finally invalidate so we can get rid of this chart and focus on a more bullish interpretation. So looking at 66.997 to invalidate this idea of a 1 down and a 2 back. Looking for 67.912 to invalidate the entire bearish count, assuming that this was a major primary wave top, primary wave 1. So let's go over and have a look at our bullish count. Now our bullish count is assuming that we are still in a larger wave degree that is yet to complete, and we've got a long way to go yet. It's assuming that we've put in our primary wave 1 all the way back here, and then gone 1, 2, and I'll just bring up the count and show you how it looks. So working off of our April low in 2020, which is a low back here, 20th of April, come up in a 1, back in quite a shallow 2, but it's all relative. Obviously we went from 43 to 33, so we gave up a big chunk of the market. We've since come up in what I'm saying is now primary wave 3. I think we may have done the 4 in a quick zigzag. We can interpret it down to here. So a flat pattern here, zigzag here, that's nice alternation. But now we've still got a 5 to come higher. So, I mean, that's extreme. That is, I'm not actually expecting it to get that high, but I'm just projecting out in time, because we are very. I mean, we appear to be building an extension according to this count. So I'll show you what I mean. Let's just get rid of this and zoom back into the more recent price action, which is, to be honest, since the recent high, a little perplexing, a little confusing. Just come down to the 1 hour auto the chart. So without overly complicating the count, trying to keep the concept simple, we just seem to have a series of extensions. Like I said, this now we can count as a zigzag. Okay, So primary wave 4, A, B, C with an extension in the C for the zigzag, as opposed to the flat pattern, the long drawn out flat pattern we got back in primary 2. So we're saying nice alternation there, and then making sense of this is problematic. Excuse me, I've got a bit of a sore throat. We can't go 1, 2, 3, 4, obviously, we're overlapping. We could go maybe 5 into a 1 and it's a diagonal, but then the 3's too short. So we have to really think of this as, better to think of this as a 1. Oh, I clicked on the wrong thing, excuse me. I've got this as a 1, 2, then another 1, then a 2 in minor time frame, and then you can see 4 or 5 waves up into a 1, zigzag into a 2, minute time frame, 1, 2, 3, 4, 5, minuet time frame, and then we get this A, B, C, expanding flat in a B, C into a 2, and now what appears to be impulsive again. So as you can see, it's just a bit of a bitch, to be absolutely honest with you. At the moment, it's counting like a way, actually it's counting more like a wave 3 extension. It's counting more like a wave 3 extension than a wave 5. So maybe this primary wave 3 is in the wrong place and we're at intermediate degree. That's possible. We may have gone in here somewhere. This intermediate degree might have to be moved up 1 to here perhaps. It's very tricky. That counts quite neatly. 3, 4. I mean, there's another option, I guess, which is that this is just an initial 3 wave move, and that this, although it's ugly as hell, it could be W, X, Y, X, Z, to pull in a B wave. So we could go A to here, B above, then down in a C to complete the primary wave 4. That will be an alternative if we breach this high. We can look at that because we can abandon our old bearish count and look for a new alternative bearish count. I always like to have 2 counts on the go. But for the meantime, I think this has to be interpreted as a series of extensions. It's just very, very tricky. You know, if we wanted to stop before that high and come back down in a regular flat, then we'd be looking, well, this is it, we'd have to cancel this out as our major correction as a zigzag. We'd have to consider it as part of a larger 3 wave move. So A, and then this would probably be C. Then you've got to accommodate a 3 wave swing in here, which is very tricky as well. And then this could bring us higher and then lower in an expanding flat or even a running flat. So yeah, I'm sorry, this isn't much help at the moment, guys. I know, I'm just trying to cover oil more frequently. 1, 2, 3 into a W, 1, 2, 3 into an X. 1, 2, 3 into a Y. 1, 2, 3 to an X. Then 1, 2, 3 into a Z. And then possibly leading to an A, B, C. Yeah, I mean, maybe I need to spend some time digging into that. For the moment, we just seem to be creating impulse waves, pullback, impulse wave, pullback, but there's so much overlapping. This overlapping that, this overlapping this, this overlapping this. It just feels like we're building a series of extensions. So really, if this is the case, and we are building some kind of extension in what could either be a 3 or a 5th wave, then we really do need to get going and see a violent explosion to the upside, and it just hasn't arrived yet. So we are going to have to come back and have a look at this next week, I think. Like I said, I'm trying to keep the oil coverage up more often. For the moment, we're just looking for the death of this bearish count here, which dies at 6719. 67 spot 912. This is the idea that we were doing a zigzag, an A, B, see, but it's been such a deep zigzag, it doesn't really make sense anymore. It's far more likely to be a flat pattern where we're going to go above the old high before coming down, which will become our bearish interpretation once this is invalidated, or we're looking at this bullish 1 2 1 2 1 2 1 2 building a series of extensions before we finally break out higher. That's the best I can do for the moment, guys. So let's wrap things up with some basic technical analysis. We're going to clear the count. We're going to bring on our moving averages, so our 10 in yellow, our 20 in blue, our 60 in orange, and our 250 in green. We're going to bring in our momentum indicators as well, and then we're going to zoom out and remind ourselves how things look on the large time frame, and we're going to zoom all the way in to recent price action here and see how we look. So from a weekly time frame perspective, things are still looking very bullish. You know, we were expecting to see with this breakdown in the MACD here, short-term moving average crossing over the long-term moving average, red bars on the histogram for week after week after week. We're thinking, well, this is a move down, consolidation, and then we're going to get acceleration to the downside. Hasn't happened. You know, it just hasn't happened. We're staying close to the previous highs. We continue to drift. We have a very bullish candle for the week, close to setting a new high. Big thick body of the candle still pushing up as I speak to you. Above the 10, which has proved to be exceptionally strong weekly support as an exponential moving average here. Here's the 10 exponential moving average. Wicked through it a few times, but it does not want to give up. Above the 20, above the 60, above the 250. 60 now coming up to cross positively over the 250 within the next couple of weeks. If we keep upward pressure coming, that would be very bullish for all the moving averages to cross back to the higher time frame, to cross back higher, above the exponential moving averages on the long time frame, weekly time frame, with the long term 250 starting to curve back up as well. All of that's very bullish. MACD is not bullish. We remain with this lag of bearish momentum and no crossover of a short over the long term back into bullish territory. We're even reading a slightly darker red candle this week, bar on the histogram. And that's because I've just appreciated, excuse me, that for some reason I have got my colours reversed. I need to save this. So scrub what I just said, that's wrong. So we're actually seeing a lightening of bearish momentum in the last week. If we do set a new high, we are going to have some pretty significant bearish divergence between this high on the RSI on the 1st of March and what will be our new high. But if this is an extension, right, so we're going 1 2 1 2 1 2 1, and then we break up here, you know, big time styly, and we get flying up in a wave 3 that's hugely extended. It could be an intermediate wave 3 extension, right? So it's just going to be a huge intermediate 3 of the 5th primary. We could easily come back up into overbought territory and cancel out this divergence. But if we don't, then that's just further confirmation. Oh, sorry, excuse me. That could be further confirmation that we are in a 5th wave. Right, excuse me, I'm just mucking about here. You see what I'm saying? We get a peak of momentum in the 3. So here's our 1 on the MACD. Here's our little bearish bit here. We get higher in the momentum in the MACD here, and then we come down into a 4. We get the height of the RSI in the 3 in the momentum here around 85 on the RSI. So we could go, you know, 1 2 3 4, fail to set a new high in the RSI, which would complete our 5th, giving us a bearish divergence before the wave completes and we break down. That's very normal for the peak of the momentum in the 3rd to create that divergence with the 5th, which is the completion of a greater wave on cyclical degree, wave 1, and then we break down into wave 2. So as hard to believe as it appears at the moment of this big build-up of 1s and 2s, if we get a significant break of this high and thrust higher, cross back over bullish on the MACD here, this could be that 5th and final wave move up. Same here on the RSI. So I'm actually leaning into this bullishly now. I will go away and work on a bearish count which considers the possibility of that expansive form. So the count's going to come back up now. So the idea of moving down, moving up, and then moving down. We'll go away and work on that during the week and hopefully have a alternative to present to you once the bearish count gets invalidated, as looking at this I think it will. Alright then guys, thank you for joining me on this technical analysis of oil. If you're new to the channel, you've liked what you've seen, please like, subscribe and smash the smash the like, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you want to. Thank you as always to all my Patreons for all your support. It's greatly appreciated. If you're interested in becoming a Patreon, there's a link in the description box below. I would advise that you leave it to the start of the next month, so June, so you don't get charged twice in succession for 2 months back to back. But go over, feel free and have a look anyway. I also have a Twitter feed. If you're not following me yet, there's a link in the description box to that as well. Alright guys, take care, and I will be back with you soon. All the best. Bye bye.